Markets continue their winning ways, and cryptocurrency gets a big endorsement. What's up, everybody? Welcome aboard to Bubba's Bottom Line. Todd Bubba Horwitz with you, and what's going on, everybody? Well, another big week for the markets. As they say in the old days, they black the card every single day, up, 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 up and away, I guess. And of course, we've broken that downtrend that we started on January 29th, and it looks like the rally might be here. It might be here to stay, but we'll see. Again, as we did during the week, we went to a neutral stance on the markets, knowing or watching that this very well could happen. Now, the key question is it real or is it fake? And again, we're not going to try to guess for a number of reasons. Volatility is brutal. Okay, we're now back down into the 12 handle of volatility. So what does that mean? Well, that means that there's not going to be a lot of excitement around the board. Okay, so now as we watch, we see that with no volatility, it changes the dynamics of trading and markets in general. Volatility is more an indication of more complacency again. And again, we're not saying they can't go up because, again, that's exactly what's happening. Other thing that we're looking at is volume has dropped into almost zero again as well. So we're now in this malaise of no volatility, no volume, and the markets really just sit here and we'll let them trade. And again, if they indeed break out and they hold on the subsequent pullback, because there will be a pullback. I mean, I would say we'll have a sell-off in the next day or two after 7 days in a row up. I would bet that there's going to be a little bit of a sell-off. Now, again, we're not saying that's going to be negative. The real key will be where it does it hold the breakout line from when it just broke out. That would be the more important thing to watch here now. But basically, pretty much across the board, Dow, Russell, NASDAQ, S&P, all going up. So we'll see. Again, we're not going to, we did switch to a neutral posture. So here we are now, neutral to markets, looking to see if this is going to be, again, the next up leg or if this is just a false breakout. So there's no real way to know at this particular point. I think if you look at it, you'll see a lot of very extended stocks and a lot of very extended indexes that are extremely overbought. And all the technical indicators some of you use are extremely exhausted. Now, again, that doesn't mean they will not consolidate. This is the key to watch for now. If the markets consolidate here, and consolidate, we can go down. I mean, we can come down a couple of hundred points in the Dow. We can come down 30, 40 points in the S&P. If we consolidate and go sideways for a while, that would lend a leg for the next up leg, and that's what we'd be looking for if indeed that's how it trades out. And that's where we have to watch the market footprint and see how that plays out. And as we look into oil, as we've been short oil and getting punished brutally. But again, oil is at a point here that the backwardation formation continues to stay in place, which continues to bring in and breed more fear. Fear is what's really driving this market. You can listen to everybody on TV, all the pundits telling you that it's a demand situation. We've got no oil. We've got so much oil, there's continuing rig counts going out there. There's more rigs, there's more drilling, there's more oil. So maybe some of the refining might be some problems. But at the end of the day, this is the same pattern you saw in 2007 before oil collapsed. This is the same pattern you saw in 2014 before oil collapsed. And we're saying, again, we may not be a participant when it collapses because I don't have much more room on the upside if oil continues to go higher. I'm going to have to eventually puke it here because, again, markets can remain irrational longer than we can remain solvent, and that is any market, no matter what you're trading. But at some point, you will see a major collapse here, and I don't think it's all that far away. But again, it's not worth trying to fight it. I've put in my mind a number where I'm getting out, and that's where it'll be, and that's it. But in the meantime, this is the pattern you see. You see gold continuing to churn down at the bottom end here. Now, it looks to me like gold has a 1280 play in it now. We broke hard. We broke down all the way from 1365 all the way down. We broke that support level, got down to almost 1300 and rallied back. But the rally was off of an oversold. Notice how we went from overbought to oversold. So we're in an oversold condition and we got a natural bounce. That would be known as a dead cat bounce, which, all markets have dead cat bounces. All markets have overbought sell-offs. But the actual markets look like they might have broken to the downside. So if gold can't hold 1310 on the way back down, that would be an indication that they're going down to that 1280 level. And that's what we are expecting before this is all done. Now, we are not selling gold here at these levels. We are looking for the opportunity to now buy them. We've made the money on the way down. We traded inside the range, and now we're waiting for the pullback to look to get in, because I don't think there's a heck of a lot of room to the downside. We think silver is still a buy, and we still think silver and gold. We still think the best trade is short gold, long silver. That we think is a really good trade, and that's what we look like there. Bonds have been steady, and as you've noticed, the 10-year has floated back and forth above 3%. So our black swan event tied in with the dollar has not really brought the markets, because, again, the 10-year has not closed consistently above 3%. Because I'll tell you, I think when we see the 10-year go over 3% and then hold, I think you'll see immediately 3.5%. And that will create a major problem across the globe and create some economic meltdown and create some selling pressure. But again, we haven't got there yet. So we're not going to anticipate when it's going to happen. Remember, we don't know. You can't time the market, which is why you wait for the market footprint to come and give you the biggest clue. And that's what we're kind of focusing on, is waiting for the clue. But when you look at the economic numbers, and everybody's drooling over these economic numbers, if you look underneath the surface, they're not all that good. Okay, again, and I'm not trying to tell you that the market's going down. I'm not trying to talk them down, but I am saying very simply, okay, we have an artificial economy right now, and that's due to the Federal Reserve. That's due to the way that we manipulate currencies. That's due to the central banks around the world, because everybody's creating the same mess, right? So all we've really done here, and if you're a conspiracy theorist, you can go read the book, The Creature from Jekyll Island. We've allowed the wealthy to accumulate more wealth while breaking down the middle class, just with this very process. And this was written out many, many years ago, okay? So you want a Creature from Jekyll Island, great book, if you want to read about what this is all about. Or you can read the book Fed Up by Danielle Dean Martino Booth, who's a regular on our radio show and is an ex-Fed employee. So you see a lot of issues here. So a lot of these numbers become very false. All right. Now, again, it's not going to change where the markets are going. Right. So again, I'm just giving you an inclusion of what might happen and what will be blamed down the road at another date, because you know what's going to happen. The housing bubble in '08 was not blamed at the time. It wasn't blamed till later. But those who figured it out early were able to benefit from that. And again, this is not a green light to say it's over. This is a warning sign to say participate, make money, but be careful and be ready, because when it is time to hit the exits, there won't be any room. And that's why when we play equities, which we're always long equities, we're a hedging model to hedge those equities so that we don't have to worry about the big downfall. But again, this happens all of the time. This is not something new, okay? And when you look at real hourly wages, we've kind of hit on this the last couple of weeks. When you look at the real hourly wages, what you're really seeing is that people are making less money than they were making a year ago, making less money than they were making 2 years ago, making less money than they were making 20 years ago. So again, we can brag about how great the numbers are, but the participation rate is no good. The amount of money that we're making is no good. So the full employment is a big bunch of stuff, okay? And that really is one of the bigger problems that we cannot continue to observe into, is to allow and remember what's going on here with corporate buybacks. What's driving the market? Well, corporate buybacks are driving the market. Why? Because interest rates are still low. So when those change, that will change things. But again, we're not telling you they're going to change now. We are saying very simply that this is a great time to observe the markets and not get overly concerned and not get overly involved. But again, remember, if you are an investor, then none of this should bother you. especially if you learn how to hedge. But even under any circumstances, you're investing in good companies. The market in history has shown the ability to go up 8% year over year throughout all of the market collapses throughout the year. So we look at it, when we talk here, we're talking more on a short-term view and looking for opportunity to capture a short-term move, whether it be a month, 6 months, a week, whatever it happens to be. So that's something that you always want to remember is what we're looking for from a trading standpoint and what we're looking from an investing standpoint. Remember, trading and investing are not the same thing. They do not mix. So investors just continue to invest and continue to do the same thing as long as you understand that you may or may not be able to get that money back tomorrow. That's why you invest only the dollars that you can afford to invest and not any more. Okay? Now, I think something important has happened here. I think we've seen commodities are starting to take leadership of markets. And I think that's part of our original thesis of what's going to happen here and part of what we're still calling for a market meltdown, just not today. All right. Again, we're going to have to watch and wait. But again, when you look at it, you can start to see the action in the commodities. You're starting to see the grain prices start to percolate up a little bit. And when we look at grains, that is a great alternative. That is where a lot of money flows. So other than, this week a little bit where the grains were down, and again, it makes sense, right? Stock markets were higher, grains were lower, cattle was flat, hogs were up a little bit. But when you look at the big picture, that's the flow of money. So some of the money flew out of those alternatives, but you can kind of see that those are all peaking up and starting to make some new highs here. So I think when you look at the bigger picture, you'll picture that this is a great alternative spot. And it looks to me, as you look at outside commodities, they're all starting to become more bullish, which means that there's money starting to flow in. And remember, when a market starts, when a bull market starts, there's not a starting gun to say, hey, boom, it's time for the bull market. It starts slowly. And usually what happens is the professionals start to get in first and they start to build momentum. And that's what I think you're starting to see in the commodity markets. And that's what I want you to be have an understanding of how this is going to work as it'll start to take off. And by the time that the retail trade recognizes it, it's usually just about too late. And that's usually near the end of the run. And most of the money has been made early. And that's one thing you'll ask and find from all professionals is that on a big trend move, the money is made early because you make the money when you buy it, by getting in at the times that look good, knowing that you have discipline to get out if you've actually gotten in too early, which will happen. You're not always going to get in right. But again, you want to make sure that you use the discipline to get in and out so that you know that you have a limited amount of risk to the downside should you be wrong on the way that you assumed was going to happen. So we look for commodities that continue to explode, and we'll come back after the break and talk a little about the trade wars and some other things and the good news for the cryptos. This is Bubba's Bottom Line, Todd Bubba Horwitz, and of course we want to remind you about our high school investing program. We just pushed over 500 high schools that we're in, and thanks to many of you who have helped us out. And if you would like to be on that group helping educate America, you can go to Patreon, patreon.com/Bubba Trading. And that's patreon.com/Bubba Trading. You can help us out. And all we're trying to do is help give the program away to the schools for free and let them try to educate our youth and help the country going forward so that we can get rid of some of the imbies that are in there now that have no idea of what markets and finance is all about. In the meantime, don't forget to catch the Bubba Show every day from 4 to 5 Eastern at libertytalk.fm. And let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, the trade wars, as you've noticed now, everybody was in such a panic. What am I going to do? If you've noticed, China is coming to the table. China is ready to talk. And China is talking about buying more, all right, to narrow the deficit a little bit. Iran, not Iran, that's something I'll talk about in a minute, but you can see that they are at the table because they understand that President Trump is a businessman, that President Trump is going to go for the big hit first and negotiate his way back down. And I think that's kind of what you're seeing here. So I think that's one of the reasons you've seen the agricultural markets. I think that's one of the reasons you've seen some of the other things continue to go higher. Now, I know the left continues to say, it's not any good and it's no good. Well, okay, it's no good, but the economy's better. not great, but it's better. The stock market is better. And it seems to me that we are trying to get things to come back to this country. And we're trying to get away from giving everything away. And I think that is something that's very important as well. And of course, President Trump put the kibosh on the Iran nuke deal. And again, who's upset about it? Those who gained the most amount of money from it. Now, everybody was concerned about Boeing and how much damage. Well, Boeing only went up about 6% after the announcement. So again, we have to separate sometimes in this country who's running the show and the difference between greed and American interest. And that's where the problem with the lobbyists and all these other guys come in, and guys and gals come in, is that they're more concerned about the money, not about the progress. And I think that's also what we've seen when we look at some of the farm commodities that the farmers were shook up a little bit about because the lobbyists were telling them how bad everything was going to be. Well, so far we haven't seen anything bad. The only way you can ever determine good or bad when you're selling something is by price. So if prices are 10 or 15% higher than when this whole announcement first started, my guess is it can't be all that bad. And of course, we're starting to see the results. And of course, unfortunately, a little bit of fighting in Syria and Israel, and this is going to be bloody. And I think one of the things that's interesting is the lack of effect that it has had on equity markets. But it has had the effect on oil, which is, of course, that backwardation formation we talk about. But that is something, of course, that will happen and does happen all the time, and that's part of the market. That's the fear cycle that kicks in. We've got different cycles of the market, and that's one of the things that happen. Now, the cryptocurrencies got some great, I think, news last week, and that was that Bloomberg is going to put together an index, or maybe they've already done it, of cryptocurrency. It's like the commodities index they put together. It's like the other indexes that they put together over the years. Now there's going to be a crypto index, which is going to be represented. It's 30% Bitcoin, 30% Ethereum, and then small percentage of others making up a pie of 100%. So what that does is that now brings the ability for commercial investors and funds and family offices to now start investing in those funds because there's a master index. There is a commercial, we'll call it a commercial index that they can now use. So I think that's something that is very bullish longer term for the crypto space. It also shows more recognition that it is real and it is going to be around. And I think this ties me into, kind of what we talked about last week, and that's our friends Warren Buffett and Munger, okay, that, call it rat poison. And I have a question about that, and that is why, if it's such rat poison, then why don't they sell their Goldman Sachs stock? Why don't they sell all of their stocks in businesses that have anything to do with cryptocurrencies? I mean, pretty logical question, right? But of course, those are the same guys that talked about inversion and didn't want, to buy companies outside the country to avoid taxes. And what they do, they bought Hortons in Canada, okay, and so they could invert their taxes. So, again, they're great investors. They've been able to make billions of dollars for investors. They've done a great job. But I do wonder about some of the things they said. And of course, same thing they said about the internet 20 years ago, that it was rat poison as well. So take that for what it's worth. I'm not telling you to go out and buy cryptocurrencies, but I think you're starting to see, as we've talked about on the Bubba Show and here for quite a while now, that these are going to be accepted. And no better person to ask than me, because I was anti and against it until I really realized what it was all about. So I think that works out pretty well. And I think that, my disdain for the Federal Reserve. And of course, once again, another Federal Reserve President Bullard says, well, there's no reason now to have to hike rates anymore. They're high enough. And I go, really? When are we going to have a true free market and let the rates decide? Now, you can bet that these rates are going higher. There is no question that the Fed has totally lost the control of the market. You can just see it in the bond market. Now, again, you've heard this from me before, but the bond market's the biggest market. The fixed income market is the biggest market in the world. In fact, it's bigger than I believe all the markets put together. Okay, except for possibly the Forex market. But all the regulated markets I believe that the bond market is the biggest in the world, and it might be bigger than all markets together because fixed income counts, all the bonds throughout the world. So, and the bottom line is that the markets, interest rates are going higher. You can try to talk them down all you want, and as the dollar continues to go higher, that is even making rates higher for those that borrow from out of the country. So we can pretend that it's not happening, but again, they are, and so is debt, and that's another problem that we continue to have is the debt. I didn't realize this, but a big percentage of people that are over 75 still have debt they can't satisfy, which forces them to have to work more, and it does not bode well. And I think this is another problem that we're going to see is that overall, we cannot survive when this debt crisis is looming. Now, again, it can grow bigger. Bubbles can grow for extended periods of time. There isn't anything that says that the bubble can't continue to grow as long as lenders are willing to lend money. Okay, and if you're a credit card company, why wouldn't you want to lend money? Why wouldn't you want to get those usury rates? This is something that is an age-old way of around the system of going to a loan shark. When you force the average borrower to have to use their credit card, you are creating the old the usury rates of the loan sharks. That's the words I was looking for, of the loan sharks. And that's a real problem, okay, because this debt will never be satisfied. And as long as the government continues to build their own debt, it's going to be a mess. Now, one of the problems that I always see here and I'm concerned about is really what you're doing by allowing all this debt is you're allowing the creation of new money. Because again, if I can lend out 9-to-1 of what I have in reserve, then I'm basically giving out and printing more money out into the system that doesn't exist because I don't even have the reserve. And the other problem I see is that when you have a Federal Reserve that is the way that it's set up, it really is there to bail out the banks. So if you just use a logic standpoint here, if you are a bank and you know that you can lend out all this money, and you know that if you make a mistake again, like you did in 2008 or many other times before, you know that the Federal Reserve is going to come in and bail you out. So you're not going to miss a trick. So why wouldn't you continue to lend out your money? I think that to me is the problem. But again, the real problem comes back to when are we going to get back to a free market lending system, all right, so that we can actually have price discovery of what fair rates are. And I think that's one of the big things we have really taken away and destructed from these markets is the ability to have free price discovery in free markets. And of course, retail sales, once again, continue to fall. So I want to know, where is all this growth going to come from? I want to know, how do we think that it's going to magically disappear? Everybody talks about the different things that are why we should go up and why the economy is so good. But unfortunately, I have not seen that. I've seen a lot of places that are in trouble. I've seen a lot of boarded up buildings. I've seen a few companies that are doing great. But even if you notice with the earnings coming out, we have not seen these big explosions anymore of earnings. Why? Because a lot of it's already been priced in. So the markets are always ahead of what's going on. And I think that is one of the big problems that we have to understand is how the market works and how everything else ties into the markets. Because if you're looking at the market and the economy have nothing to do with each other, okay? The market is the market, and there's a very small percentage of people that are actually in the market, okay? So, and even now with the cryptocurrencies, there's less because a lot of the millennials are going into the crypto space. That is a crypto product, and I know many that have done extremely well. I'm not one of them, but I know many that have done very, very well in the crypto space because they believed in it from the beginning, because that was their area. Now, whether or not it'll last, whether or not they'll go through a bubble or a breakdown, I mean, again, there is no doubt that there always is the lurking of a major meltdown coming somewhere. We saw it in the NASDAQ, okay, but look what happened to the internet. So again, it was the Bitcoin fall from 20,000 back to 5,000. Was that it? We'll see. I have no idea. But I do know in my opinion, the cryptocurrencies are real. They're going to be here. They're going to stay, and they're going to be a big part because you start to see a lot of this stuff go out, and you're starting to see a lot of countries use them as their own currency. So that's something to keep in mind, and we'll see what happens. And of course, we're going to take a little break here and come back with my commentary after the break. Remember our high school investing program. If you'd like to help us out, we just pushed over 500 high school, and you can go to Patreon, patreon.com/Bubba Trading. And of course, don't forget to get the Bubba Show every single day at 4 to 5 Eastern at libertytalk.fm. In the meantime, also this week, catch me on Fox on Monday, Tuesday, Wednesday. I'll be on interspersing during the days as I go to New York. And we're going to go back to Bubba's Bottom Line right now and have my commentary. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, what would a weekend be without me giving a little bitch to somebody? And, you know, this oil has been a real joke with the way that it's run up. But again, I can't fight the market. So I'm not saying that, you know, those of you who are long, great. I know one of my buddies on Twitter has been long oil and saying, hey, it's going up, it's going up. So, hey, I have no problem with that. But I do have a problem with this. Now, this is one of the things that when you start to have the major institutions come out, and I know Bank of America now and some of the other are calling for $100 oil. And I'm not saying that it can't get there, but I know from being a trader on the floor that they don't really believe that, in my opinion. Again, these are my opinions. This is not fact. But I've seen this movie enough times to know that when Bank of America and Citibank and all the other banks start making these big, ridiculous calls, okay, that they usually are on the other side of that trade. They are usually already starting to now sell, and what they're looking for is they're looking for an initial boost because they're making this big call to captivate buyers, to bring them in, and of course, that then brings down the market after they get the final buyers to push it up. Now, based on the commercials, they're short oil, okay? So they're part of the commercials. Now, again, it doesn't say which ones, but there's a net short position out there. So you're telling me that they're going to fight that whole net? No, I don't think so. This is one of the big problems that I have when you see these ridiculous calls in a lot of different products. You know, I've talked about this before. It's just like, you know, you're going to say that when Apple was 700 and people go, oh, it's going to 1,000. It is finally at 1,000, but they were calling for it 6 years ago. So again, the markets will get natural appreciation, but I really don't like these manipulative big calls that are made, because what that really does is that picks on the people that don't have the same understanding, and it helps them get into the markets because the institutions that are making these recommendations assume that their investors are not going to get out, so they can continue to hold their positions, and the banks and those institutions can benefit from that. So I think that's something very important to watch. If you look at the big commercials right now, they're short the volatility index, they're long a lot of bonds, and they're giving recommendations on the other side of all those trades. And that's always a concern to me, because the average American, the average trader, the average investor sometimes watches too much and reads too many of these things, which actually trap people into making the wrong decision. And that's where I have a problem. It's the same guys that talk down something. For example, right now they talk down the cryptocurrencies. Well, maybe they're buying them, and I would like to see their books when they're done. And unfortunately, we don't get that disclosure from these people. But I guarantee you, and I can say for an absolute fact certainty, when I was in the trading floor and we were in a big pit, on one side of the pit was a small buy broker, and on the other side from the same firm was a gigantic seller, creating the market, getting the buzz to take it up so the short seller could come in and sell it. Happens all the time. It's known. There's a lot of names for it, but there's even individual traders that are big enough that do things just like that. And it's always very careful to watch the ratings that places put out there, the numbers, because again, if they don't make sense, then they probably don't make sense. So don't get excited about those big calls. It's the same thing as if you watch the markets themselves. If you watch the bid offers and how's the size, okay? When there's big size on one side, so if there's a big bid to buy, really, that big bid is really a seller, okay? Because they're just holding up the market to get people to buy. It's the same as this Bank of America call on oil. And again, I'm not saying it's going down tomorrow. I'm just saying that you got to be very careful when you hear these major calls, because typically they are meant to deceive. They are meant to spoof the market a little bit. And we don't spoof here at Bubba's Bottom Line, but we do tell you to have a great weekend. Happy Mother's Day to all you mothers out there, and my mother and all of you. Happy Mother's Day. I appreciate you all being here. And we will see you back on Monday for Bubba's Daily Update. And also, we'll see you back here next week with Bubba's Bottom Line. Have a great weekend. Happy Mother's Day. And as always, thank you so much, everybody. We'll see you later.